Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Barcelona at SmartCon 2023 by Chainlink. Joining me for this segment, we have Nitin Gaur. He's a Managing Director at State Street and also previously founded IBM Digital Asset Labs and served as CTO at IBM Worldwide. It is great to see you, and welcome to TradeTalks. Let's talk about some of the technical constructs, such as blockchain network infrastructure, key and wallet management, custody, and the technology approach when it comes to crypto assets. What is essential to lowering those barriers and reducing the impediments or costs to, make it a more efficient system?
Yeah. So Jill, thank you for having me. It's a great event, great energy. I would say that, and I wrote about this, that you have two fundamental challenges. One is operational framework. It's harmonized operational framework. We have a system that's running. It's an older technology, and that essentially is running our financial system. And then we are trying to modernize the financial system and transform it by using asset tokenization technologies, the things that you mentioned. Mm-hmm. And the challenge is, how do I coexist old with the new? And so I have to have an operational framework, because this operation of the financial services industry eventually lies with the ability for the bank and financial institutions to be able to handle the traditional assets and the tokenized version of those traditional assets. And to achieve that, we are here at Chainlink. Interoperability is a single biggest design imperative that we need to consider, because not only ability for us to be able to move asset across various different blockchains, but also ability for us to be able to interoperate with the older system, which is the older ledger and messaging-based systems, I think are the two biggest impediments. And if you don't solve those impediments, then that delays the entire adoption of the asset tokenization space that has a lot of promise that we're discussing here.
Let's talk about market infrastructure for a moment here. The financial industry, it's been experimenting with digital fiat for a while now, that CBDCs, there's stable coins, tokenized deposits. Can you highlight the importance of these in the broader context of financial market infrastructure?
Sure, but if you look at genesis of stablecoins came into existence to provide fungibility and liquidity to the crypto markets, and it changed the fundamental nature of how we transact in crypto market. It became a primary exchange mechanism. And I think converse is true for our existing financial system, because at the end of the day, there's a duality to every transaction. We are moving assets in return for the settlement services, which is essentially movement of fiat. Now, CBDC, or central bank digital currencies, stable coins, or now tokenized deposits, are different form factors of tokenized deposits, aiming to solve the near real-time settlement challenge of the industry. And one thing I think is a challenge is the balance sheet implication. These are accounting implications, as CBDCs are sovereign issued, just like your fiat, the dollars that you have in your wallet, versus a stable coin which is issued by a financial institution or non-banking financial institution. That becomes a liability, because somebody has to keep track of how much money that backs a specific stable coin. And then you have tokenized deposit, which essentially is ability for you to be able to move deposits from a bank to another bank, just like you would move fiat. So while the treatment of these tokenized fiat are different from accounting and balance sheet perspective, the goal is the same. We would like to achieve near real-time settlement services, which I think is quintessential and most important for the adoption of tokenized assets infrastructure.
Do you think this is almost a distraction in a way?
I think it is. I think it is. I think we are in this element of figuring out the role of stable coins. The conversation around CBDC is sort of evolving over time. But I think if we were to look into tokenizing fiat, and that's the term that I use, we are solving the settlement issue. So to me, solving the settlement problem is one of the biggest impediments in the industry as well.
Let's focus on Web3 design. Can you contextualize the notion of Web3 in relation to technology adoption in a traditional financial institution?
Sure. So Web3, the principles of Web3 embody around ownership economies. Ownership economy implies that I'm able to look into what we call as non-banking financial assets. So your identity, for example, could be monetized. Your healthcare records could be monetized. And when you look into monetization, that implies some level of transaction. So the thesis of Web 3.0 is ability for us to look into owning our own data, monetizing our own data, and that leads to hyper-financialization. Suddenly now we are able to monetize everything that's around us, as opposed to the original bankable assets like your house and your car and your equities and your bonds that you hold in your portfolio. So the ethos of achieving some of the tenets of Web 3.0 lies on our identity and cryptography and trust that we have to maintain the system, which gives us a little bit of control of the things that we own. So from that perspective, there are technical imperatives, things like you mentioned, tokenization, custody of assets, key management. These are complex for average individuals. So the role of banks changes over time. So at that point, we've been debating this to say, what is our new role in this new ecosystem? Are we providing transaction services? Are the new token market utilities are born, because suddenly now you're dealing with mobility of these tokenized instruments that have value, not necessarily tokenized assets, but tokenized instruments. And so from Web 3.0 perspective, that is the future. And whatever transformation of infrastructure that we're going through is trying to address the needs of that future system that we are building, if that makes sense.
Well, of course it makes sense, because I mean, the end user, I don't want to say that they don't care, but when I think about what I'm doing, with my traditional financial institution, it just works, right? But to your point, we're moving on to a more digitized way of living. Can you share some of the efforts at State Street to achieve this?
So first thing is we are approaching this with humility, in the sense that we are a large financial institutions, a heavily regulated one, and for that we have to ensure that we are approaching this with cautiously optimistic approach. What that means is that we want to ensure that the use of technology is optimal. We are adhering to the existing regulatory guidelines. At the same time, as a financial institution, whether we deal with tokenized assets or the new class of emerging crypto assets, we have certain responsibilities, fiduciary responsibility and prudential treatment of assets. We have to, which takes time, it's slow, but we're trying to understand the technology and what's our role in this new ecosystem, but also what is the role of these technologies in our existing ecosystem. It's an interesting journey, I would say.
I would agree with you, and that's a great distinction that you make, because it's one thing to say, there's all these fintechs that are popping up, and there's areas of the world where they perhaps might have leapfrogged in terms of product and the technology that's available. However, there are regulations that will never go away, particularly if you're operating in the US and the EU, which is so interesting because you came from a big tech company, IBM, Big Blue. Right. I mean, everybody knows IBM. And you moved to a financial services institution, State Street, to dedicate all that energy to transform and modernize, traditional finance. Do you think you've come far in achieving those objectives, or at least laying the framework?
So I would say there's a lot of education, both in terms of us regulating our leadership, educating our leadership, but also educating the regulators. And I would say it's a slow process, because there's an existing world that business has to run, and we have to find our role in that business. But I would say that it's slow. But again, I think I've learned a lot personally, that I think if you look at many of the DeFi projects, I don't think they know what they're disrupting, because one first step is to understand what needs to be fixed. And so my attempt to moving to State Street was to be able to understand the existing financial systems, learn from my work that I'm doing, and be able to help modernize and transform that system with technology per se. But there are other impediments. There are operational challenges, there are regulatory challenges. It's our ability to get educate the ecosystem and work with our cohorts, because there's some parallel work that our cohorts and our clients are doing, and we have to be in lockstep with them. It's not something we can do on our own.
Yeah, I don't think the average person understands how complex U.S. capital markets are. I mean, even down to a community bank, there are so many moving parts between, and everyone has competing interests. You have legal, you have compliance, you have the technology side, you want to make money, you're in a business. The framework is massive for capital markets.
It absolutely is, and I think there are a lot of, as you rightly mentioned, Jill, there are a lot of competing priorities, and one, especially when you have a bear market, then all our focus goes towards our existing business, and these regulations have evolved over time, and it's meant to protect the consumer, the end consumer. So we have to keep that in mind, that because any mistakes can be expensive and they have consequences. So we have to ensure that we are approaching this with ultimate sense of humility and ensuring that the mistakes are less. Mistakes will happen, but we have to minimize the impact of the mistakes, and that takes time and energy to articulate, justify, go through risk compliance and the whole 9 yards.
All right, Nitin, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.